What is going on, everyone? Anthony Drew Gary here, host of the How To Show, where we talk about optimizing life, money, and happiness one how to at a time. This week, we're talking tax brackets, and we're going to do it in the most exciting way I know how, which still isn't very exciting. So let's switch over to Zoom and get that started. All right, so this week's content comes from a conversation that I recently had with a friend of mine about the possibility of him getting a pay increase and being really concerned about it. And I thought to myself, well, that's odd. Usually getting a pay increase is a good thing. But I want to talk about why this happened and a little bit of the misconceptions behind it. And so what we did is we opened up here the NerdWallet website for the income tax brackets on the federal level to start to influence the conversation that we're going to have today. So for the sake of this, basically the NerdWallet website has the income tax brackets, but these are the same brackets you can find on the IRS website. You can Google income tax brackets, and you've probably heard of this phrase before. You can find them in a lot of places. All the information is the same. It's published by the IRS. They get changed slightly every year based on the cost of living. But as a general rule, we in the United States right now, we have income tax rates of 10, 12, 22, 24, 32, 35, and 37%. And so in the instance that we were talking about, let's just say that my friend was making $40,000. And so he looked at this chart and thought to himself that this means that he's paying 12% taxes. And so he was thinking that he was going to get a pay increase. And let's say that he gets a pay increase to making $45,000. And all of a sudden he got really concerned because that means that he's going to go into that next tax bracket. And he thought to himself, well, why would I get a pay increase if the pay increase is only $5,000, but that means I would have to go from paying 12% taxes to 22% taxes. There goes all my pay increase. I have to give it straight over in taxes because the gap between those two brackets is 10%. Thankfully, that is not how the system works. It's a progressive tax system. And so we're going to break this down in how to read the tax brackets for federal income taxes. When he's talking about getting a $45,000 salary, thankfully, that does not mean that all of his income is going to get now taxed at this 22% rate. So the tax system is progressive. And what that means is you start at the 10% rate. And everybody starts at the 10% rate, whether you make zero or whether you make 523,601 down below here. It's noteworthy that I'm showing this for single filers. And so this is, basically a single person filing taxes by themselves. You can look at different parts of this website to find married, filing jointly, filing separately, head of household, but we'll go back for the sake of this example. We're going to talk about this for a single filer like the friend of mine in the example. So let's say he gets that job and he's going to start out making 45, or maybe he's going to be starting out making 47 because he negotiated well. And so the first 95.50 of his income, he's going to pay 10% on. And so what that means is for that first 95.50, he's going to pay $995 because that's the 10% rate. And so what that means is for $99.51 to $40,525, he will pay 12% on those dollars, meaning he'll still pay the $995 from this first line. And then for the second line, the 30-some thousand dollars for this row, he'll pay 12% on those. And so what that really means is that for the $40,526 up through the 47 that he got as part of the new job, he's only going to be paying the 22% rate on that roughly $7,000 of income, probably $6,500 worth of income. So thankfully, what that means is that instead of paying 22% on 47,000, he's only going to pay that 22% on the 6,500 worth of marginal increase above and beyond the bracket thresholds for the 12%. And this isn't taking into account any sort of deductions he might have, like the standard deduction or anything like that. This is just to start out with how much you will owe based on how much you make, and the deductions will come later. So just wanted to do a quick video that suggests, if you are changing jobs, which a lot of people are doing right now, and you're finding yourself making more money based on the tax brackets, moving you into the next tax bracket does not mean that all of your money is going to be taxed at that higher rate. It just means those handful of dollars above and beyond the next threshold level will be, but all of the previous dollars will be taxed the same way they always have been within at least the last couple of years with the tax system that we have in place right now. And so getting a pay increase is still a good thing. It doesn't necessarily mean that you're going to lose a whole bunch of money because you jumped tax brackets. Wanted to do a quick video on this to make sure that we can put everybody at ease that this is not a real concern. You will only be taxed for those incremental dollars. That's going to bring this episode of the show to a close. Hopefully there's something useful you can take out of that, and you can share it with somebody who may not understand exactly how the tax brackets work. It sounds a lot more complicated than it really is, so hopefully we can start sharing this information with the world and have fewer questions about it as time goes on. If you've got any feedback or any comments for the show, leave them down below, and as always, you can hit the like button to let YouTube know that this is a video worth having other people watch. And you can hit the subscribe button to let people know that you're watching this content and that you can be the first to know about new content as it comes out each and every Wednesday. You can check out the podcast too by showing your support there, searching The How To Show. And as always, if you are looking to sell your home in the Indianapolis area, you can get in touch with me either in the comments or at indiedwell.com. I'll be in touch with you there as well. Until next time, this is Anthony Drew Gary, host of The How To Show, signing off.